The narrative in the Western media about the dominance of the US dollar is very contradictory and schizophrenic. On the one hand, you have Western pundits who claim that de-dollarization is a myth. This is exemplified by the New York Times columnist Paul Krugman, who's a centrist economist who won the Nobel Prize. And in 2023, he published an article titled "De-dollarization Debunked." Krugman cited a report by the US Federal Reserve that claimed that it's unlikely that the dollar's status as the global reserve currency will decline. And then Krugman wrote, "Why would anyone think otherwise?" Now, what's funny is at the same time he admitted that the dollar's share of the foreign exchange reserves of central banks around the world has fallen in the past 2 decades from 71% to 58% in 2022. And in the past 2 years, it has continued to fall even further. But despite that, Krugman concluded his article stating, quote, "The hype about de-dollarization is much ado about almost nothing," end quote. And we've seen this same narrative constantly echoed in other media outlets, especially the financial press. Business Insider published an article in 2023 titled, "Dollar Dominance Isn't Going Anywhere. Here are 5 myths about de-dollarization." At the same time, we've also seen media outlets in the West claim that Russia and China's BRICS economic alliance will fail at countering the West. Foreign Policy magazine insisted, "Don't bet against the dollar." It argued that there is no real global alternative to the US dollar. Reuters actually told BRICS that instead of expanding, it should disband, which, I mean, why would they listen to Reuters' advice? And then the French state media outlet France 24 said that BRICS nations have failed to rebuild the global financial order, declaring that the new development bank has been a complete failure, not acknowledging that BRICS is still in the early stages of transforming the global financial order. This narrative being spread by Western media outlets is a great example of what you could call cope. They are coping with the fact and trying to cover up the fact that the US-dominated financial system is changing. Now, it's not going to happen overnight. It's not going to be something that happens immediately in the short term, but in the medium to the long term, it is absolutely happening. And we can already see the beginning of these very profound changes happening all across the world. And today I want to look at a very rare example of an article published in the Western media that actually acknowledges what is happening. And this is written by an economist who is telling other Western economists and governments to wake up to the reality and stop blinding yourself with your arrogance and your ignorance. I'm going to be looking at an article that was published in the Financial Times, which is the dominant financial media outlet. This is the newspaper of the global capitalist class. CEOs, financial traders all around the world, they read this newspaper. And this is a very interesting article that was published by the economist Mohamed El-Erian, who is an American economist of Egyptian descent. He's very mainstream. He was previously a deputy director of the International Monetary Fund, the IMF. He was also an advisor to US President Barack Obama and the US Treasury. In fact, Obama appointed El-Erian as the chair of the US government's Global Development Council. This guy is very mainstream, but I think the fact that his family is of Egyptian descent and the fact that he's traveled around the world a lot, despite the fact that he's this very mainstream American economist, I think he's seen some of the changes happening in the global south. And with this article, he's trying to tell his colleagues that they need to start taking de-dollarization seriously because it is happening. These Western pundits like Paul Krugman are like ostriches, and they proudly have their head buried in the sand, and they just keep screeching from the top of their lungs that no one can ever replace the US dollar. The US empire will be here permanently. It is impervious. It is omnipotent. And this article is a wake-up call for them. It's titled, "Why the West Should Be Paying More Attention to the Gold Price Rise." Mohamed El-Erian begins this article noting that something strange has happened to the price of gold over the past year. It seems that the gold price has decoupled from its traditional historical influencers, such as interest rates, inflation, and the dollar. So typically, when there are high rates of inflation, the gold price tends to go up because gold is an inflation hedge. However, in the past year, inflation has fallen in the US and in most countries, especially after peaking due to the COVID pandemic and supply chain disruptions. However, despite the fact that inflation has been falling, the gold price has continued to rise. In the past year, the price of gold has risen by nearly 40% to all-time highs. So what is driving this? It's not just the market. It's not just the free market and capital flows. It's also politics and geopolitics. In this article, he notes that there is an increasingly persistent behavioral trend among China and middle power countries. That is, more and more central banks in BRICS countries and BRICS curious countries that are interested in de-dollarizing, they are buying large sums of gold. And in this article, Mohamed El-Erian warns that this is a trend that the West should be paying greater attention to. He noted that consistent foreign central bank purchases have been an important driver of gold's strength. It reflects a desire of many countries to gradually diversify their reserve holdings away from significant dollar dominance, despite America's economic exceptionalism. And he also acknowledged that many countries are exploring possible alternatives to the dollar-based payment system that has been at the core of the international architecture for some 80 years. I mean, this is one of the most mainstream economists in the US, an advisor to Obama, an advisor to the Treasury. He was a top official at the IMF, and he's telling his colleagues, look, de-dollarization is happening. Take your heads out of the sand, Paul Krugman and other people. Now, of course, this is an issue that we here at Geopolitical Economy Report have been talking about a lot for years now. And I recently published a report, which I will link to in the description below, that looks at a historic document that was published by Russia, the Russian Central Bank, and the Russian Finance Ministry this year in 2024. Russia is the chair of BRICS. And for the BRICS summit in Kazan, Russia, from the 22nd to the 24th of October, Russia published this historic report in which it reveals BRICS's plans to de-dollarize, to create a multi-currency system, to create a cross-border payment initiative. And this also includes plans not only to de-dollarize international trade and cross-border payments, but also to try to de-dollarize the reserves held by central banks, also to create new financial assets denominated in the currencies of BRICS members, also to have more lending from the BRICS Bank, the New Development Bank, to try to strengthen the BRICS IMF alternative, which is called the CRA. And other proposals are to create systems using central bank digital currencies so central banks can directly settle trade imbalances without the need for the dollar or for the US-dominated SWIFT interbank messaging system. And the report even proposed creating commodity centers so BRICS members can settle trade imbalances using gold or grain or oil or gas or other commodities. So these are all the very important issues that are being discussed by BRICS and are largely being ignored by the Western media and Western governments who say, BRICS doesn't matter. But if we go back to this article published in the Financial Times by this economist, Mohamed El-Erian, he's telling his colleagues, you guys need to take this seriously. It is happening. And he writes in the Financial Times that there is a general loss in confidence in America's management of the global order. He talks about America's weaponization of trade tariffs and investment sanctions, and Washington's reduced interest in the rule-based cooperative multilateral system. And this is very clear if you look at a map of countries sanctioned by the US. It's 1/3 of all countries on Earth, including 60% of poor countries that are suffering from US economic warfare. And Washington and its allies in Europe have been seizing hundreds of billions of dollars of assets belonging to countries. And especially in 2022, when the US and Europe froze $300 billion and euros worth of assets belonging to Russia's central bank. This was a complete watershed moment. I really think this decision will go down in history as one of the biggest steps toward global de-dollarization. Because previously, the West had seized assets belonging to Iran and Syria and North Korea and Venezuela and Afghanistan, which, I mean, some of these are relatively big countries like Iran, but in terms of the global economy, they're still relatively small economies. But when the West went after Russia's foreign assets, $300 billion worth, this was crossing the Rubicon. And many countries around the world said, wow, if they can seize Russia's assets, they can seize our assets. This includes longtime Western allies like Saudi Arabia, like the United Arab Emirates, like Egypt, like even Turkey, which is a member of NATO. All of those countries are now de-dollarizing. They are buying large sums of gold to replace the dollar-denominated assets in their foreign exchange reserves. And meanwhile, Western pundits like Paul Krugman say, there are no real alternatives to the US dollar. And a common phrase you hear from Western mainstream economists is they say that the US dollar and the US dollar system is the least dirty shirt in the hamper. But there are alternatives. Not only are those alternatives being explored by BRICS in holding other assets, there's simply gold. I mean, I'm not a gold bug by any stretch of the imagination. I do not think that countries should go back to the gold standard, and almost no countries are trying to go back to the gold standard. Having your currency pegged to gold is very deflationary, and especially when there's a recession and the government needs to provide a stimulus, you can't really do that. You can't print more gold like you could print more dollars to stimulate your economy. And this is one of the reasons that the Great Depression was so painful for so many countries around the world in the 1930s, because there was this deflationary loop, this death loop. And it was the world-renowned economist John Maynard Keynes who famously showed that at times of depression or recession, governments should spend more to stimulate the economy. However, we're talking about something completely different. De-dollarizing your reserves and holding gold doesn't mean that your currency is going to be pegged to gold. It simply means that you have these reserves of gold that you can use in case there's downward pressure on your currency, in case you have a deficit, a current account deficit, a trade deficit, and you want to pay for your imports. So then you can sell that gold and get a hard currency, or you can sell that gold and then buy back your own currency to strengthen your currency on the foreign exchange market. So I'm not saying that countries are going back to the gold standard. That's not what's happening. But what is happening is that more and more BRICS countries and BRICS curious countries are de-dollarizing their reserves simply by buying huge sums of gold. So if we go back to Mohamed El-Erian's article in the Financial Times, there's a chart in here that shows central banks' net purchases of gold. And you can see that in 2022 and 2023, central banks around the world bought huge sums of gold, over 1,000 tons each year, which is a massive increase from previously. It's more than double most of the years in the previous decade. And in the first half of 2024, central banks already bought about 500 tons. So they're on record to buy over 1,000 tons in 2024 as well. And why did this massively increase in 2022? Well, you can say certainly part of it is because of inflation, but this is central banks' purchases. This is not global purchases. Usually, a lot of investors will buy gold when inflation is high because it's an inflation hedge. But why would central banks do that? It's not just because of inflation. This is being driven by geopolitics. It's because in 2022, Western governments seized Russia's US dollar denominated assets and euro denominated assets. And many central banks said, wow, we need to start buying lots of gold. That's exactly what they're doing. And this mainstream economist, El-Erian, he acknowledges that the Western economic war against Russia has not been successful. Russia has continued to trade and grow its economy, by the way, faster than all other economies in Europe, some of which are in recession. And he noted that Russia has been able to transition its financial system despite the fact that many Russian banks were kicked out of the SWIFT system. So he notes that Russia has created a clunky trade and payments alternative system that involves a handful of other countries trading in other currencies. This has allowed Russia to bypass the dollar and maintain a core set of international economic and financial relations. And now, after the proxy war in Ukraine and the attempt to eject Russia from the financial system, and it turned out that Russia was too big to sanction, now the war that the US and Israel are waging across the Middle East, across West Asia, not only in Gaza, but against Lebanon, which now Israel's invading. They're attacking Iran, they're attacking Syria, they're attacking Iraq, they're attacking Yemen. And in this part of the article, El-Erian is a bit ambiguous, vague, but we know what he's referencing. He notes that with the conflict in the Middle East, the US is viewed by many as an inconsistent backer of both fundamental human rights and the application of international law. And then he adds that many countries note that the US has shielded its main ally from a response to actions widely condemned in the international community. He's, of course, talking about Israel. He's saying that Israel is carrying out crimes against humanity, backed by the US. Of course, the International Criminal Court has applied for arrest warrants against Israel's top leaders over their horrific crimes in Gaza. And meanwhile, the US is arming Israel, protecting Israel, sending it $19 billion of weapons in 1 year. So the entire world can see this clearly. And many countries in the global south are saying, first of all, the US showed itself to be a pirate, stealing the assets of Russia and Venezuela and Iran and other countries. So it's a risk if we hold dollars. Now the US is helping its ally, its protectorate, carry out war, wage war all across the region, carry out these horrific crimes, and they're worried that they could be next. So this is also fueling de-dollarization. It's not just being driven by market forces. This is very much geopolitical. This Financial Times article notes that there is an erosion of the dollar's dominant role, and there is gradual change in the operation of the global system. Now, to be fair, he's saying gradual, and I agree. There are people, outlandish people on YouTube who say that dollar is going to be toilet paper. I'm not saying that there's going to be a collapse immediately of the US government and the dollar, but this is happening, and it's a gradual change. But if you listen to Paul Krugman in the New York Times, he tells you no, that there is no dollarization. It's a myth. It's much to do about nothing, as he said. Well, Mohamed El-Erian pointed out that there's an increasing number of little pipes that are being built to go around the core of the US dollar, and a growing number of countries are interested and increasingly involved. He notes this is a broader phenomenon which is building secular momentum. And when economists say secular, they mean long-term momentum. And he notes that as this develops, as there's more de-dollarization, this risks materially fragmenting the global system and eroding the international influence of the dollar and the US financial system. And this would have an impact on the United States' ability to inform and influence outcomes. So this is a very important article by a mainstream American economist who once again was an economic advisor to President Obama. This guy is very mainstream, and he's telling his elite colleagues that they need to take de-dollarization seriously. But by the way, there's also another aspect of de-dollarization that I want to address here that was not acknowledged by El-Erian in his article in the Financial Times. And this is the fiscal situation in the United States. You see, it's not just geopolitics that's helping to drive de-dollarization, but in many ways, it's also the fiscal and monetary policies of the US government. Now, for a decade, since roughly 2015, the total share of US Treasury securities held by foreign investors has been steadily falling. It peaked at about 34% in 2015, and a decade later, as of 2024, it's around 22%, maybe 23%. And part of the reason for this decline, of course, is that some central banks, like in the BRICS countries, have been de-dollarizing. But it's also because of the growing debt in the US government. US federal debt has exploded in recent decades, especially since the rise of neoliberalism with Ronald Reagan and then the financialization of the economy, and especially after the 2008 financial crisis and then the pandemic in 2020. And as of 2024, US federal debt is at more than 120% of GDP, more than 120%, the size of all of the goods and services produced in the economy in 1 year. And earlier I talked about how when a country is going through a recession, the government should deficit spend to stimulate the economy, to bring it out of recession. And so that's true. We did see massive deficits, massive US government deficits after the 2008 financial crisis, which was around 10% of GDP. And especially in the pandemic, it was nearly 15% of GDP. However, even when the US economy is not in recession, the government is still running these gargantuan deficits, which as of 2023 are still at more than 6% of GDP, which is very stimulatory. And of course, the reason that the US government is doing this is to pay for its enormous military budget of well over $1 trillion. Some estimates estimate it's actually around $1.5 trillion when you consider all of the other expenses that are related to the military. So the US can run a massive empire with 800 foreign military bases all around the world. And then, of course, the US government is paying for huge tax breaks for the rich and for corporations. So it's running these enormous deficits that are the kinds of deficits that most countries would run during a war or during a recession. But in the US, they've become completely normal. So this has led many foreign investors to say, why should we invest in US Treasury securities and US government debt if inflation is consistently higher than the yield on US Treasury securities? We're actually losing value over time. So why should we continue to fund the US government as it runs these massive trillions of dollars of deficits? Why are we helping fund the US government and the war machine, the US military, as it wages war around the world? Why should we fund that? And we've actually gotten to the point where the US Treasury market is starting to see the impact of this. So in September, the US Federal Reserve reduced interest rates by 50 basis points, that is 0.5%. And almost always, when the Fed reduces interest rates, that means that yields should also fall. Yields on Treasury securities should fall. So as interest rates go up, the yield on Treasury securities typically also goes up. However, what happened in September when the Fed cut interest rates by 50 basis points? Instead, the 10-year Treasury yield went up, not down, it went up, which was a sign that investors in the US Treasury market are saying, we are demanding a higher yield. There's less demand for US Treasury securities because they do not have confidence in US monetary policy and in US fiscal policy. So you have this crazy situation where there is consistently less foreign demand for US Treasury securities, and yet the US is running these trillion-dollar deficits to fund its war machine around the world, and it's expecting foreign central banks and institutional investors and retail investors to buy up US Treasuries, while also simultaneously threatening to seize, to freeze, to steal the treasuries that were bought by Russia or Iran or Venezuela or potentially China. So you have this crazy contradictory policy of scaring countries around the world, telling them they should not buy treasuries, while the US Treasury Department is issuing more and more treasury securities every single year, and it wants to reduce interest rates. But if it reduces interest rates, inflation will probably come back, but it needs to reduce interest rates because debt is 120% of GDP. So with that much debt, it's becoming extremely expensive to pay the yields on Treasury securities when they're at over 4%. And the US government is basically at the point where it's spending basically as much just to pay the interest on this debt, on these securities, as it is paying for the military, which again, the US has this massive empire around the world with 804 military bases. The US spends more on its military than the next 10 largest military spenders on Earth combined, or all other countries on Earth combined. And now it's also spending that much to pay the interest on its debt. So the point that I'm getting at here is this only further incentivizes BRICS countries like China to de-dollarize. And this is exactly what China has been doing for a decade. China's holdings of US Treasury securities peaked in 2014 at about $1.3 trillion. And as of 2024, it's at nearly half, around $770 billion in US Treasury securities. And if you look at China's overall holdings of US assets, whether that's Treasury securities or US agency bonds or US equities, that is stocks in US companies, you can see that China's total holdings of US assets in its reserves as a percentage of GDP, they're at the lowest level since 2001 when China joined the World Trade Organization. So while China and many other countries are de-dollarizing, who in the world is buying US Treasury securities? Well, you can see that it's the American vassals in Europe. Investors in Europe in the past decade have been buying more and more US Treasury securities, while China and the BRICS countries are de-dollarizing. So this means that investors in Europe are helping to fund the US government and the US war machine, and they're helping to keep the yields on US Treasury securities relatively manageable. I mean, we already know that they're rising, but at least keeping them from exploding too much. And this is even clearer if you look at the holdings of US vassal states like the United Kingdom or Canada, which has increased its investment in US Treasury securities by 7 times over the past decade, or Taiwan province, which is part of China according to international law, but it's the authorities on Taiwan are pro-Western, basically puppets of the US. And you can see that while mainland China has been de-dollarizing, Taiwan has actually been buying more and more US Treasury securities. So this is how the US government is funding itself and the massive empire it has around the world with 800 foreign military bases, its wars, constant wars around the world. This is how the US is funding it, through more and more debt. And then who's buying that debt? Well, investors in the US, and then also a few vassal states like in Europe or US-backed forces in other parts of the world. But meanwhile, China and many other BRICS countries are de-dollarizing, and they're in the process of creating alternatives, which is something discussed at the BRICS summit in Kazan, Russia, from the 22nd to the 24th of October. Now, this is not a process that's going to happen overnight. It's a process that's going to happen over years or even decades, but it is a process that is accelerating. And this is one of the issues that I am most interested in. I am Ben Norton. I'm the editor-in-chief of Geopolitical Economy Report. So if you want more information about international finance and changes in the global economy, please be sure to subscribe. Please share this, and we will be back very soon for much more coverage. Thanks for joining me. I will see you all next time.